Hey guys, I'm the Newb investor. Today we'll be screening Disney stock through our three metrics to determine our best entry prices for the stock. Disney stock is currently trading at $131.75 with the highest price of $201.91 on March 8, 2021. That's 34.75% of the highs. Current market cap of 239.87 billion and PE ratio of 78.19. They don't give out dividends anymore. First metric, we want an EPS multiple lower than 3. It's 45.46. We get this by dividing the PE by the EPS. This is high at 45.46 because the EPS is very low, which skews the PEs. If you look at the EPS history here, you'll see the EPS declining, which will cause the PEs to go up until the prices stabilize. What we'll do here is to look at the previous years when the EPS was stable. I went back 3 years of data and we'd see the EPS here. This should give us an idea of how high the EPS can get when everything went back to normal for Disney. We can expect an EPS of 4 to 8. Second metric, we want to pay $1 or less for 1% of the money they're making. This is based on the lowest yield between their net income and free cash flow yields of the current year and the 5 and 10-year average yields. The more data the better, but in this video we'll only be using 5 years of data just to show you our process. What you see here is revenue deconstructed, the costs and expenses they use to make those revenues, the income they get off of those revenues, and the free cash flow they generate off of those revenues. The above values are in billions, below are in percentages of their respective revenues, or I would call yields. I'll show you the relationship of the cells. I have here two tables, one from years 2017 to 2021, where you can see the steep decline in their net income and free cash flow yields. With this data, we won't be able to determine a steady yield where we can base our PEs from. So I did the same thing in my first metric, where I went back 3 years, which I did here in the second table. Mind the years here. It's from 2014 to 2018. From this table, we're able to have steady yields where we can base our assumptions from. Looking at their yields, it is stable at 13 to 16% of their revenues. But we'll use the lowest of the four highlighted values to base our assumptions from there. We can assume a PE of 10, 12, 14 based on their yields and a little margin of safety. We won't be needing this yet as we're just looking for the best entry prices for the stock. Third metric, we want to know our discount compared to when the markets have valued the stock before. I have here two historical data, one from Guru Focus where these data are readily available, and the other from Macro Trends, where I took the PEs manually from the range of consolidation the stock has traded before. You'd see here the highs and the lows of PEs it traded, and the number of quarters I took the PEs from. Of the two highlighted values, we'll use the lowest to base our assumptions from. This metric confirms our entry PE assumptions of 10, 12, and 14. In summary, the stock is obviously overvalued based on these metrics here because of low EPS and low yields. But we want to know the best prices to start a small position for the stock. As you may recall, the PE assumptions we'll use is 10, 12, 14. With the current EPS, obviously it's overvalued because it is low, but we'll assume the EPS of 4 to 8 based on the EPS from 2014 to 2018. The stock can go as low as $60. If we use an EPS of 4, you might want to start a small position at 110. But 85 looks more realistic for now. I don't own the stock. I don't think we should pay premium for the stock. I wouldn't buy the stock just yet. If I were you, I'd wait for their financials to clear up. Valuation matters, guys. It is easy to balloon this stock up to $1 trillion. But At the end of the day, it's not worth that much at the moment. When COVID hit, the stock should have plummeted, but it went up. Now it's correcting itself back to normal levels. I don't think we'll see those highs of 200s for a year or two. This three metric I use is designed to determine the best PE to buy a particular stock, as I believe PE is the price you pay for in a company. This is my process of screening stocks to buy at what PE by looking purely at the company's financials and none of their fundamentals. If you like to invest in these companies, I'd advise you to look at their fundamentals, their charts, and more of their financial data and metrics like long-term debt, some important financial ratio, etc. As always, do your own research.